Our opening slide is the free market solution to a broken cost of capital, which is a awesome title for this. Let's get into first. We've got the percent of GDP, a weighted average, global debt, and as a percent of GDP. What are you looking at here?
Yeah, so this is just the best chart I could find. It seems to be a little bit outdated, but it's just basically aggregate global debt. It's an estimate because it's not really known, to be honest, with how the financial system works, the Eurodollar system, fractional reserve banking. But this is just basically a rough estimate of total global debt. And some estimates from people that I speak to say it's much higher, around 400 trillion. But either way, a trillion is a million millions. So quite a lot of debt out there. And if we go to the next slide, we can kind of see what's kind of the problem here when we're talking about a free market solution and Bitcoin being that. So this is the 10-year U.S. Treasury bond. For those that aren't really familiar, the dollar is the world reserve currency. So the U.S. Treasury bond and the yield off that is basically kind of the like free market rate, or not free market, but the rate that the entire financial system goes off of. So this is kind of that bedrock that the entire global financial system operates on. And so you can see from 1981 all the way to today, yields have been basically down to the right, a lot of lower highs. And so with every kind of financial crisis, every debt crisis, yields plummet, and the credit binge continues. And this is nominal yield, so this is before inflation. And then the next chart is even a little bit scarier.
All right, next one, we've got the real 10-year Treasury bond yield versus the 10-year tips. What's this showing us?
Yeah, so you can just kind of ignore the tips, but what the real yield is it's the same chart that we just showed, but adjusted for inflation, right? So you can think of this when you borrow money, you're paying an interest rate, and if you subtract the inflation rate on that debt that you're paying back, what's that yield you're paying on the debt? And so right now, with the U.S. Treasury bond, basically, if you buy the U.S.'s debt, you give money to the U.S. government in exchange for an interest payment and getting your money back at the end. Right now, on an annual basis, you get about a minus 5% return, and that's if CPI, that's if the inflation rate they're reporting is true. And so, why is this a problem? Essentially, because not only are we talking about the debt, but every asset in the world, every asset has a valuation, has a market cap, has a fair value. It's being valued off of a negative cost of capital, negative real yield. So whether you're talking about Apple stock or baseball card business or anything, it's being valued with basically a cost of capital or a yield where real yields across the planet, $300 trillion worth of assets. Even more if you're counting equities and real estate and the whole 9 yards, probably $700 trillion worth of value. It's all being basically valued with this distorted cost of capital because of central banking and because of how far we are in this kind of fiat debt-based monetary system. Rates can't sustainably rise or else the whole thing collapses. So we have a problem, and I think we have a solution as well.
It's absolutely nuts to think about how crazy this has gotten. Your next slide here is Bitcoin, the Perpetual futures open interest. What is this showing us, and why is this important?
Yeah, so I just, this whole kind of slide deck, this whole presentation is to help people kind of understand, one, there's a big problem out there, and two, a lot of people throw around Bitcoin as a solution, or you'll hear digital gold, or Bitcoin is shorting bonds, and you hear all these sorts of analogies, but and especially with Bitcoin derivatives, there's a lot of confusion out there because these markets are really complex and they move really fast. But really what Bitcoin derivatives and what Bitcoin, the bearer asset, which has no yield, right? If you hold Bitcoin in your cold storage, there is no return in Bitcoin terms. You're just holding a digital bearer asset. But with Bitcoin derivatives, that is actually starting to change. And so there's this whole complex new world out there that I believe will, in the coming decade or maybe two, disrupt this $300 trillion bond market Ponzi. So the Perpetual futures open interest, Perpetual futures contract, we've gone over it a couple of times, but I get a lot of DMs, especially after your shows, Pomp, and people are asking me to explain it a little bit further. And so, I figured we could break it down a little bit. A Perpetual futures contract is just a futures market that never expires and just rolls over. And so there's speculators that are betting on the price of Bitcoin to go up or down through long or shorts. And currently that market is about 10 to 20 billion dollars, give or take. So it's still pretty small when you're thinking about the 100 to 500 trillion dollar asset pie. But this market has seen incredible growth over the last couple of years, and I think we can expect that going forward.
Do you think that it can continue to grow materially from here, or is this kind of like maybe not the top of the market, but definitely like it's harder to go kind of exponential from where we are? Like there was such major growth. How much bigger could this market get?
Yeah, so right now Bitcoin's valued at about, give or take, $900 billion. A lot of people have a lot of different opinions. And I think in terms of percentage growth on a relative basis, it's a lot harder for Bitcoin to say 10x like it did in a year in, say, 2013, than it did, compared to today, when it would take hundreds of billions, like a trillion, tens of trillions of dollars for that to occur again of capital inflate. But I would suspect that $100 trillion, valuing Bitcoin at $500,000 that's 5 million. I'm sorry, is basically what I would perceive to be relatively fair value when you consider just the monetary tributes and kind of the big problem in the world today, right? When people say, what solution does Bitcoin solve, I tell them the biggest problem in the world: the broken cost of capital. No other market can, no other product or service or I guess protocol can solve a $500 trillion problem. It's the biggest problem in the world today.